Hey guys, want to make a quick video on relative volume, how I use it in my trading, how you can use it in your trading. We're gonna go over long time frame, short time frame, basically intraday trading. I want to go over basically why I can show you like trap positioning, strong positioning as well, and then we'll kind of go over how it's calculated with Z-score. So let's go over it real fast. All right, so first thing we're gonna go through is relative volume. What the heck even is it? So all relative, at least the relative volume, I use, all it's calculating is going to be the volume based on something called z-score. So first you're going to have, like, let's say you have like a moving average. You're going to have your normal volume. um think about it like a dish. Let me draw it this way, actually, like a distribution. Right here is where most of your volume comes in, and then when you have these crazy outliers, this is where your little sticks down here are going to be highlighted. Do you really need to know more than that? No. I think you should know, you know, on the longer time frames, kind of what the relative volume is, so you know when it's high, and when it's not high. And you guys can see, the relative volume. So I have relative volume here. This is volume sweep by Leviathan, and then I just have regular volume. You guys can see it's very similar, but not the same, right? Like here, you guys can see it didn't really calculate this one the same. Like here, this one got really more red than this one over here. So it's not one to one. And just kind of keep that in mind, right? You're showing, on a relative basis, based on this kind of z-score normal distribution graph, where are the outliers. Is it perfect? No, but that, I just want to know where the outliers are, because that normally shows me where some interesting stuff's going on. So on the higher time frames, how am I really using this? Let's delete the volume from here. Mostly I'm looking at it from, where did we get a high volume candle, and is it in an area that I'm looking to trade? So I'm one that really ooh, you cannot see that at all. One that really reminds me is going to be this one down here. You guys can see the relative volume was absolutely insane. So what can you kind of deduce from here? So range low, this is an area I'm going to be watching for. Is it low volume when we're breaking out on low volume, or we're breaking out on high volume? And we're breaking out, or we tried to break out on extremely high volume, and we couldn't get through it. So what is going to happen? You're going to have a bunch of trap positioning in here, and then you end up getting kind of that reversal rally. So you really have to put it in context. It's not just, oh wow, high volume, it's instantly going to reverse because everyone's trapped. Here we had a bunch of strong volume, and we kept the trend going. So just something to keep in mind. Like, this was the Trump pump. You guys can see it basically started with a high relative volume breakout, which is exactly what you want to see. If we're going to break out, you want it to be on high volume if it's going to be strong. It's a low volume, normally not as strong, just kind of drift of death. It drifts up, it kind of breaks out, and then it just dies. So um, we had this extremely strong breakout, high relative volume. This is something you never, ever, ever want to fade. Multi month distribution. So that's why I'm using it on the longer time frames. I'm normally looking at the daily. Where is the high volume coming in on the daily, and kind of trading off that. Like, just recently, literally today, we had this, great contextual risk reward level, and we're having some high relative volume into this level, which is a good sign. Hopefully we trap some people and we get a reverse. It's mostly based on the S&P anyways right now, with Trump um, making crazy decisions every 5 seconds, but that's neither here nor there. So now let's go on the lower time frames, and we can kind of see how we use this. So one thing to note, on these lower time frame traps, especially if you're trapping into a low, what I see happen a lot nowadays is we'll get a high volume like this, and we'll actually keep breaking down. This won't be the low yet, just yet. Um, and then volume will actually taper off until kind of there's no more sellers left. Just, I don't even want to say it like that, but so let's just, I guess let's analyze this low, right? So we have a high relative volume come in. We kind of have this 3 drives into the low, and I think the S&P started to stabilize. You know, it wasn't nuking anymore. This is basically where you want to get involved, right? Just based on some low time frame price action, you know, this would be literally my immediate level. I'm just out right there. I'm just out, right? So we kind of have this breakout from this level. We break down on high volume. You don't want to fade this just yet. You do not want to fade this. Then we kind of bottom out 3 drives into low volume, which is good, right? There's no more sellers. They're not pounding the low. It's not always like that. Sometimes you have a massive, massive volume candle and everyone gets trapped. So guys, context is very important, but I'm just showing you kind of walking through the step by step here. So we break out in high volume. We kind of, you know, form a bottom on this 3 drives pattern. No more sellers left. And then we kind of start marking up. All right. I do also want to go over this kind of move here intraday. So what you guys can see here, like if I just mark out where we get the high volume, and of course it's white. You can see how it kind of, obviously I'm cherry picking. Let's do all of them. It's on extremely low time frames. Let's do maybe the 5-minute. Make it a little bit better. You guys will start to notice how we tend to top and bottom on these high volume candles. Not always, you know, if we push out, sometimes it's on very good volume. Like I'm looking for an example. Like here, we had a bunch of high volume and we're just nuking. But you know, it's very context dependent on these lower time frames. Are we trapping people from the intraday low that was yesterday? Like here, right? So we have this kind of swing low point. Did we even break it? Never mind. I thought we broke it. Let's see. Nope. Okay. Never mind. But let's see, like here. Yeah, so this is a good example. So we come up into a previous swing high. You guys can see this is like even above these highs over here. We have a high relative volume candle. And all you're looking for, right, is you want people basically longing into the top, and then they get trapped, and then you can take the other side of the trade and you get the short. It's really that simple. On the medium time frame and the lower time frame, I will be paying attention to, you know, where is volume coming in? Is it high or low? But in essence, I don't want to make it too complicated. It's really that easy. Throw it on your chart. Pay attention to it on previous day lows, previous day highs, important swing points that you guys think are important, and that's basically it. I mean, if you get a bunch of people shorting and they're getting trapped, that's where you want to get long. If you have a bunch of people longing and price isn't going anywhere, you want to get short. If we're breaking out of a range and volume is really good, you don't want to fade it. So that's all it is. It gives you more context. It's not an end all be all. It's not going to win you every trade. It's just another tool in the toolbox. So that's how I use relative volume. Basically, traps. Where's the high volume coming in and the low volume? Shorter and longer time frames for context. And then I also like to use it kind of on these important swing points. See if we get a trap, see if we don't. Again, on these trap setups, you can go way more deeper into it. You can go with Agar, which is another tool. You can go with the footprints. You even have aggregated footprints now, so you can really get really deep into the trap positioning thing. But this is just an easy way to really view it from a chart. You'll have a bunch of courses talking about the footprint. The footprint is great, but if you're trading these altcoins, you can't be staring at 12 footprints. It's just not possible. So relative volume really gives you a good example of when you can be entering, when people are getting trapped, and that's what you want. The market is all positioning. It's going to trade against positions. You want to be on the right side and not get squeezed. So, if you guys have any questions, throw them in the comments as always. But hope you guys enjoy.